Hi friends, I'm Jalota. Welcome to the MCQs of Financial Management. Today's question is going to be quite interesting because it'll combine your costing fundas with your financial management. Just before I'll continue, for CA Inter Costing, we are in process of putting all our lectures for CA Inter Costing every Saturday, Sunday on our YouTube channel. That will include all the lectures, of course, in English, Hindi. Once it is done, then we'll be shifting to complete English lectures also. And then you'll be getting soft copy of the entire book. You'll be getting the homework section, the tests. You'll be getting ranking of every question, summary of every question. Spread this to those students who still have to be appearing, for their examination. So therefore, they all get the best knowledge, but absolutely at zero price.
Hello everyone and good evening and congratulations to all of you. I think what worked for me was the completion of syllabus way before my exams, and that helped me to revise topics a lot more times than a usual student. So thanks a lot Anuj sir for the concise materials and the wonderful teachings. Thank you.
Let's start it off for this question. So if margin of safety is 0.25 and there is 8% increase in output, okay, EBIT will be. Just before I'll continue, please do remember, if output increases by 8%, even sales will increase by 8%. It's important for me for this question. Okay. 4 options. EBIT will decrease by 2%, it'll increase by 32%, it'll increase by 2%, and it'll be decreasing by 32%. Now see, I'm deriving something for the benefit of the students, but in case you all know the answer, this is the time to be commenting. Okay, now see, over here, first of all, operating leverage. Now, operating leverage originally has one formula, and that is nothing but percentage change in EBIT upon percentage change in sales. This is a formula. I've explained the logic of that ample number of times in every MCQ before this. This can alternately be written as or contribution upon EBIT. I'll require this contribution upon EBIT after some time, and then original formula I'll require to solve the question. Okay. So operating leverage is contribution upon EBIT. What do you mean by margin of safety ratio? It's margin of safety in rupees upon sales. Just to refresh your costing fundas, margin of safety is nothing but sales above break-even sales. So what is break-even sales? It's a level of sales at which company earns zero profit. So therefore, if you all remember, I'm not sure that you all remember, sales is divided into two parts. First part of sales is called as break-even sales. Second part of sales is going to be called as margin of safety. Okay. On break-even sales, whatever contribution you earn, that goes to meet your fixed cost. On margin of safety, whatever contribution you earn, that is going to be called as profit. Exactly that thing I'm going to be doing. So let's multiply numerator and denominator both by PV ratio. Okay, so margin of safety ratio is equal to margin of safety into PV ratio divided by sales into PV ratio. Now, margin of safety into PV ratio gives you profit. Profit means EBIT. And sales into PV ratio gives you contribution. So, numerator will get replaced by EBIT. Denominator will get replaced by contribution. So, margin of safety ratio is equal to EBIT upon contribution. Now, look at point number 1. Look at point number 4. Do you think so that both of them are inverse of each other? So therefore, please do remember that operating leverage and margin of safety are reciprocals of each other. I'll require this kind of a funda over here. Okay. So margin of safety ratio and operating leverage are reciprocals of each other. Okay. And therefore, point number 5 is there. Operating leverage is equal to 1 upon margin of safety. Let me erase point number 1 box. Let me erase point number 4 box and only have one single thing. Operating leverage is equal to 1 divided by margin of safety. Now, apart from this, I'll also require point number 1 original formula now. OL is equal to percentage change in EBIT upon percentage change in sales. So, recall point number 1, recall point number 5. Let's go over to the question once more. If margin of safety is 0.25 and there is 8% increase in output, EBIT will be 4 options are there. Now see, if margin of safety is 0.25, okay, then operating leverage is nothing but 1 upon margin of safety. So therefore, operating leverage will be 1 divided by 0.25 is equal to 4 times. Let's have original formula of operating leverage. It's percentage change in EBIT upon percentage change in sales. Beta, percentage change in sales was 8%. Okay, so therefore OL is equal to 4. That is there in the question. Okay, means that is whatever we have found out 2 lines above. So 4 is equal to percentage change in EBIT divided by 8, because output increased by 8%. So sales also increased by 8%. Let's shift 8 to this side. So percentage change in EBIT will be 8 into 4, that's 32%. So therefore, if sales will increase by 8%, EBIT will increase by 32%. That should be the correct answer. So answer should be B over here. That should be the correct answer. Yeah, that is the correct answer. That's it from my side for today. In case you want to be watching all the MCQs that we all have released so far, then scan on this QR code. You will be directed to a playlist that has every possible question that we have put so far on FM and will be putting so far on FM also. And one other thing, we have made chapter-wise playlist also. So in case you wish to be watching any specific chapter, please do the needful. I'll see you all next time in another question. Till then, take care of yourself. Bye.